Hello, hello, and welcome to December 1st, 2020. We entered the last month of the challenge with SLB at 49% for the alphas. There it is, 49% SLB for the alphas. We have we are past our we do have our 30% ROI rule exit in play. So the stop has now been moved here, and we can get that other 51%. We can get that last ROI for SLB. That said, let's go on now to RTX. RTX is right there on just shortly behind the SLB Raytheon, and we do have a qualified 30 ROI exit. We are now here at the 30-day moving average, and we're running at 42%, and it's a 507 against a nut of 896. That's kind of nice when we have these nice low O's, and we have some nice good movement to possibly taking it up to the total payback. That goes on to BMRN. BMRN is a pharmaceutical. Whoa, that didn't work out very well. There we go. It's still at far point. It has not achieved this 30% ROI to move up here. So we do have the warning track in play. And we'll see about this price running into a small doji here with a possibility we could get a little bit of turn up because we are doing kind of strong down here in stochastics and in the MACD and RSI zones. So that's going on now to our ATVI. ATVI, yes, ATVI, the game company. They're still at far point also. They have not achieved their 30, so their warning track is still in play. And they're running at 5%, only $40 to an O of 1694. That takes us now to Adobe. Adobe got in. Now I gotta do a little explanation here about Adobe. Adobe is a very expensive stock. And you're like, wait a minute. If that's an expensive stock, that means possibility of an expensive option. True. But at the same time, you work within your budget. You go to your budget and you say, if you're going to allocate 3, 5, or 10%, that's the allocation. So when you go and look at the option to go and purchase, if it's above your allocation, don't take it. Now this here, Raytheon, I have to say, was a gamble. This was a gamble. And I did get called on it by my peers saying, you stay within your rules. So that's then exceptions to the rules happen. But the bottom line is stay within your, so here at Adobe, the bottom line was that Adobe, we found a nice option at 540, which fell within the parameters for the alphas, and we got into the trade, and we're running only 2%. But you can see that the far point is not too far away from the 30-day moving average. So we have some time to get there, and this option is going to go around until March. It's March, and it's a 600 strike call. Okay, so that is the conclusion of the alpha. So let's go on and knock out the Tigers over at Tigers. At Tigers, their leader is TMUS, and TMUS is right here. And this is this joined in a few days ago, if I'm not mistaken. But the bottom line is you can see that the green price channel is starting to move up. Once we can hit our 30, then we'll be able to move to the black price channel to protect profit. Remember rules. Number 1, protect capital. This is what we're doing down here, and eventually with the 30-day moving average exit rule. Then we protect profit at the 30% or better. We anticipate that will protect the profit. Number 3, take the profit. Move your stops up. When you're in profit, take it. If your trade's going against you, also be wary of moving up your stops. I have long-term options, so we have some good time here. Then rule number 4 is exits do not retreat. One of my biggest mistakes in early trading was that I would move my exit with hopium. Well, hopium gets to be a very dangerous drug in trading, and your hopium doesn't work, and the end result is you end up losing more than you should have. So once you move your exits in the right direction for the money, do not retreat. Rule number 5, rinse and repeat. Okay, that takes care of the lesson for today. We're going on to T-minus. Same with SPY. SPY is another very very expensive option. But we found something within our parameters, and we got in at 597. So over here, we're going to go and update our data. 597 is our intro price. That's what AOC stands for. It stands for actual option cost, and the actual option cost is right here in the trade column. So there we are with 597. We're anticipating 574. So we had a little bit of slippage, but not a lot. Going on now to UAA. UAA is now playing hovering game, and it's when and also it suffered a little slippage too, 236 to 295 actual cost. So that ran us almost 60 cents more than we were anticipating. Slippage happens. It happens when you have gaps, and it also happens when you have some interesting plays in the market. Going on now to the last and final leader for the Tigers is XLE, and XLE is uh, XLE did get its 30% ROI, so it's on the black price channel right there. So it's not holding on to a lot, 2%. So if we get stopped out here, we're going to be looking at possibility of a break even or maybe a very small loss. And small losses are a lot easier to overcome than a bunch of humongous large losses. With that said, that is the conclusion of today's report for the losers become winner for December 1st. The Alphas leading with SLB at 49%. The Tigers at 13 points. Alphas at 16 points. And the countdown begins. The 31st of December, these accounts will go flat, and we'll be looking at new challenges for January 2021. With that said, I thank you all. Take care. Bye-bye.